Hey guys, I'm Matthew Pillmore. I'm your cash flow coach. I'm also the president of VIP Financial Education, and this is VIP's Financial Literacy series, where we really take a look at financial terms and topics that are critical to your success in both personal and business finances. And in these videos, I actually like to go beyond simply defining and describing a term or topic and actually discuss what makes it matter to you in your personal or in your business financial situation. And today I want to look at assets and liabilities, two of the core elements of success. Now, let's go ahead and dive into today's content. This is understanding the difference between assets and liabilities, because it is crucial in financial management, both personal and business finances, as well as investing. Really anywhere that money is being exchanged for something, you've got to understand assets and liabilities. Assets really at their core provide you future benefits, and liabilities on the other hand are really going to be obligations to both you and your businesses. Now, when looking at assets and liabilities through the lens of accounting, it's important to understand the difference between the two in areas like depreciation, in areas like debited versus credited, in areas like types and classifications or equation, format, placement, and balance sheets, etc. Assets are depreciable, while liabilities are non-depreciable. I'm not going to really dig into the depreciation aspect on this video. So if you'd like us to do a longer video all about depreciation, make sure you comment below and drop a like on the video. It lets us know that that's something that you're interested in. When dealing with increases and decreases, if an asset is increased, it would be debited, while if a liability is increased, it would be credited. And the opposite is true when talking decreases. If an asset is decreased, it would be credited, and if a liability is decreased, it would be debited. Now, when it comes to types and classifications, assets can actually be classified under many different types. The most typical includes tangible or intangible, current or non-current, fictitious assets. Liabilities can be classified under current and long-term. And when it comes to format and placement in a balance sheet, assets are really placed first, with current assets ahead of non-current assets, whereas liabilities are actually placed after total assets are computed, with current liabilities first, and then of course non-current liabilities following. So let's get real. I mean, assets and liabilities are much more than just simply line items on a balance sheet, of course, right? And they're the difference makers between, say, being wealthy or in a continuous state of debt, living paycheck to paycheck, for example. And simple math will show us that keeping your liabilities low, like your debt, while also increasing your assets in order to stack your cash flow, is a marvelous road to wealth. And that said, there are certain types of assets that really do the trick for this above and beyond any others. And in tomorrow's video, what I want to do is actually dive into just that. I want to answer the question, what assets make the wealthy wealthy? Right? If you want to be wealthy, the bottom line is you're not going to want to miss that video. So make sure that you're a subscriber, hit the notification bell as well so that you're alerted every time new videos drop to the channel. We do upload several times a week. Make it a great day today and take care. Alrighty, so I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use, and it's quick to navigate. So let's go ahead and walk through that process together. Go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy, and go ahead and select the red button. Immediately, it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the revenue and assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow cruncher for your businesses, an individual cash flow cruncher for your real estate, and an individual cash flow cruncher for your household.